Hey everybody. So I have had a lot of discussion about what's happening with the market. I'm also seeing a lot of people post about the market, but what they're posting is basically the numbers for the first quarter. Now the first quarter does come out strong. It shows that after the first 3 months of the year, we have had more sales in the first quarter. We're on pace to have the most sales in the month of April. Our average sales price is higher than what it was during the boom years here in Vegas. That's not a lie for those of you who are doubting it, saying just realtors are just trying to sell, or convince me. So they're not lying. Those numbers are strong. The issue that we're gonna run into is when and if this crisis affects us. So the best way to look at it is if we go back just about 12, 14 years ago, during the housing crisis, since this is a housing question that people are kind of going through. So let's look back. The peak before the current $320,000 average sales price here in Vegas, the peak prior to was $315,000. We reached that peak in 2006. That peak was hit in 2006. Now, if you don't recall, the official recession happened in December 2007. Now, in order for a recession, you have to have consecutive quarters of declining GDP growth. So, according to the U.S. National Bureau of Economic Research, which apparently is the official arbiter of U.S. recessions, I didn't know that till I did some research, the Great Recession officially hit off in December 2007. For those of you who lived here in Vegas, we already ran through that. By December, we had already seen people who were letting their houses go, vacant houses. But we also have to understand that during that time, anybody with a pulse could get a mortgage. There was 100% financing. People would own 4, 5, 6 properties that there's no way they could afford. But because there was no money or no skin in the game, they just bought it anyway. My landscaper at the time, no exaggeration, bought a $600,000 America West home. He wasn't making that kind of money to be buying $600,000, but his mortgage payment was like ridiculous, like $2,000 a month. And if you're wondering how that's possible, ask your loan officers about reverse mortgages. Actually, wrong. Negative equity mortgages. Basically, what it was every month that you make a payment, you'd owe more on your house. I forget what it was called, because it's already not allowed, just like stated incomes here in the state of Nevada are not allowed. Now, they do like documented. Anyway, that's neither here nor there. So that was in 2006. That was the financial crisis. In the middle of 2007, 1 year after we hit our peak, 12 months after we hit our peak, our average sales price went from $315,000 to $309,000. So in a housing crisis where people were literally walking away from their homes because they had no money on the game, because they owed, more than what the houses were worth and all that, the average sales price dropped $6,000. It took another total of 20 months before we even dropped below 300,000, and it did drop significantly. So from 2006 to the end of 2007, our average sales price went from 315 to 263,000. That was a 15% drop, and it took over a year and a half to get to that level. So understanding that will kind of give you an idea as to if this particular economic slowdown that we're having, when is it going to hit the housing market? And they've also come up with studies that says not every recession equates a housing bust, which is true. It just depends on how it would affect affected essentially. The one that they pointed out that it didn't affect it was in 2001, but that was a .com boom. That wasn't a housing boom. It wasn't necessarily tied to the financial crisis. And I know about that because I was a network admin at the time when the .com boom burst, and a lot of us not necessarily didn't have a job, but we went from a job that was offering $200K a year to $100K a year. So it wasn't a job loss; it was just a pay cut. The bottom of the market, the lowest average sales price that Vegas hit during the housing crisis was $118,000 average sales price of a home. That happened in early 2012. From peak to bottom was 6 years during an actual housing crisis. So for the buyers who believe that they're going to buy because there's going to be some sort of a 20% drop, I had a buyer thinking that a $350,000 house was somehow going to be all of a sudden $280,000. There's a few reasons we don't think that's going to happen. One, we think that the unemployment is exaggerated right now. Yes, they're looking at the national numbers of people filing for unemployment, but currently in Las Vegas, most of the full-time employees on the Strip are getting paid. Venetian, Wynn, MGM, Resorts, and Caesars, even Red Rock and stations are paying their people until the end of the shutdown, which is the end of April. Some of them have even stated that they will maintain full pay and full benefits until the middle of May. Now, that's for full-time employees. There's a lot of people who have lost their jobs, and will not be coming back. They're not going to be brought back until maybe the market, until the economy is a little bit more recovered. So at the end of the day, we really won't know, because the unemployment numbers that we're getting now are kind of elevated. And we won't know what the real unemployment really is until probably September, October. And that's when we're going to hit or feel some sort of effect in the market. But the other factor is, a lot of these people who own homes have owned homes for over 4 years, which means they have equity in their houses. So what makes people think they're just going to all of a sudden unload their house? Currently, we have a moratorium on freezing all foreclosures in the state of Nevada while the emergency is happening. Once it's lifted, if somebody did lose their job or didn't get their job back, or their unemployment runs out, then you're talking about at least a year to a year and a half before that house, from the time they missed a payment to even hitting the market in the foreclosure market. REOs don't happen overnight. We've consistently had a handful of REOs here in Las Vegas, even during a boom economy. But it's slow. It's a trickle. There will more likely be a possibility of short sales happening in the valley, but I doubt it, because a percentage of people have some sort of equity in their homes. And so right now, it's not a lie that the housing market isn't crashing, or that it's good to be optimistic about the current housing market. The interest rate, yes, are record lows. Bless you. And the unemployment is a little high, but we don't expect that to stay that way. And so at this time, the decision to be made is the holding costs of not buying versus buying or selling. So the question will always be, why are you buying? Does it fit your budget? Are you overextending yourself? Because if you're a buyer waiting for a 20% downturn, statistically speaking, you're waiting at least, during the Great Recession, 31 months before we lost 20% of our value. Remember, it took 6 years to lose 60% total. So it took 31 months to get to that 20% loss in average sales price from the peak in 2006. So the question is, are you going to wait 3 years, 3 years more to rent, in the hopes that you'll get 20% lower? The way the market is going and trending right now, it looks like it's leveling out. The average sales price did go up by about $5,000 quarter over quarter. So the question is, if it remains the same or if it goes up just a little bit, if interest rates go up, you got to do what's right for you. You need a roof over your head. Are you happy with just renting? It's 100% a decision that you have to sit down and financially make. So the numbers could go both ways. And so I know that a lot of real estate agents are very optimistic about the numbers, because they're looking at the last quarter and looking at what's happening so far in April. And that's perfectly fine. And those who lived through the crisis understand that the downturn, if there is any, probably won't show up for another 12 to 18 months in houses, in home pricing. Like I said, $6,000 drop year over year between the peak 2006 to the middle of 2007. There was only a $6,000 loss on average sales price in the valley. And that was in the middle of the worst recession, downturn in the economy since the Great Depression. And that was extremely centered on housing. And that was filled with people who bought 5, 6 houses, 100% equity, had nothing to lose. There was no money in the game. There's no down payment. They just dropped and walked away and couldn't afford it anymore. So I hope this helped answer some questions to understand. And, if you have any further questions, feel free to ask me. But yeah, being optimistic is not wrong. Looking at their current numbers is not wrong. They're not puffing it. They're not lying about it. It's pretty factually based. And if you're waiting for a downturn of 20, 25% down, I guess I'll see you in 2.5 years. I'm hopeful that won't happen. And I'm hopeful that most people get their jobs back and the economy gets back on from this pause that we're running through. Stay safe, everyone.